Hey people, thank you for stopping by at Building Wealth with Rajeev. Last week, Snowflake came out with its quarterly earnings. It's a popular company, came out with IPO in 2020. Here I do a bit of roundup of quarterly earnings. How well did they do, what it means for the long run, whether the stock is investable at these prices. Hope you like the content. If you like the content, please follow my channel. It's going to be highly motivating. Please share with your friends. Also do write your comments. So a bit of basic introduction or basic information on the company, not a very easy to understand company. Founded in 2012, based in Montana, listed in 2020, one of the largest IPO in the history. Frank Slootman is the current CEO, former ServiceNow CEO. ServiceNow is a very successful company. So Frank Slootman is a CEO with a very good reputation. Now, what does Snowflake do? It's into data warehousing, data lake, data engineering, data science, data applications. So basically anything to do with data. Now, you can call it data warehouse as a service company. In layman term, you can think of like a warehouse outside Singapore or warehouse outside LA, which you use for your things like you put your furniture there, you put your sofas there, you put your bed there, and when you need it, you go there and get it back. So it's similarly, the companies, they hire the services of Snowflake Cloud and put all their data in, and they use that data when they need it. But the beauty is the data is organized, very well organized. And also the companies can do all the kind of analytics on the data, use their AI to find the trends in that data, which helps them making the decisions. So pretty useful. So anything with the data, that's what Snowflake is. Now, why the Snowflake is so popular? One of the reasons was Berkshire, Warren Buffett company, took a stake in this. They have about 1.95% stake in Snowflake. Now, one thing which you guys need to know, and I was also a little bit confused about it, that Snowflake is not a SaaS model, not a SaaS revenue model. How SaaS model works is basically a continuous stream of income. So the companies take subscription in the beginning, pay the subscription fees, and they repeat it next year. So it's basically very, predictable model, while Snowflake model is based on consumption. So 93% of revenue is consumption based. So whatever the company consumes, it pays for that. They may have bought more, but if they don't consume, they don't pay. So that makes it somewhat little bit unpredictable revenue model, but it's still very good. You'll see it in the company's growth. Now, let me go through the quarterly earnings. Now, if you look at these charts, fairly impressive growth. If you see from 2021 to 2022 financial year, the whole year is about more than 100% growth. And if you see quarter to quarter growth is about 85%, pretty impressive growth. Now, if you look at the customer momentum on quarter to quarter basis, it's about a 40% growth. Now, you would see that 40% doesn't sound like it's a good growth, but it's not like hyper growth. But if you look at the customers over 1 million product revenue, it's a fairly hyper growth, 98%. That's amazing. Now, the retention rate of the company is huge. If you look at, if some customers were spending $100 with the company last year, now the same customers are spending about 174. That's what roughly the 174% retention rate will mean. That's really, really world class, top of the rug. Now, I heard the earning call and the CEO or the CFO talked about that retention rate will decrease. It's difficult to maintain 174%, as obviously the customers will increase. They may not be equally loyal, but he expects the retention rate to be in the north of 130%, which is also pretty impressive. Now, one thing which shows the strength of the company is its gross margin. If you look at the gross margins in financial year 2021, they were 69%. Now they're 75%. So pretty good gross margin as such, and also very good growth in gross margins. Now, company's free cash flow positive on non-GAAP basis. I don't have the number on the GAAP basis, but it's kind of a bit of a trend. So the revenue is growing, the gross margins are positive, and they're becoming free cash flow positive. So so it shows the company has operating leverage. It's operationally doing very well, or it's improving. Now, the company is expanding internationally. This bothers me a little bit. I'm not very happy, personally very happy with this chart. If you see in 2022 to quarter 1 and quarter 1 financial year 2023, there isn't a huge difference. The 84% business came out from US, Americas, and now it's about 82%. Asia Pacific or EMEA, it's about the increase is only a bit. I think it's about 2% increase. So this is something which they need to look into it. The international expansion. Financial year 2023 guidance. This is little conservative because, as you know, their business is not very predictable. So they've kept it on the safe side. They're talking about a 66% growth. Now, if you look at what they've done this year, for example, 100% growth, 80% growth. So 68% growth looks like a bit conservative or a bit low, but it's still pretty high. And obviously, the growth rate for the company is going to slow down as it gets older. 74% is the gross profit, which is very good. And operating income loss will be about 1%, and non-GAAP free cash flow is about 16%, which will be an improvement over 2022. So I wouldn't say a lofty guidance, but a reasonably good guidance. But the market was not very pleased with the guidance as the stock went down. So this in a nutshell was quarterly earnings. Overall good, I would say pretty good quarterly earnings. Guidance is slightly weak. Now, whether the stock is investable, now please bear in mind, do your own research. It's for education purpose only. And it's how I understand it, and your understanding might be different. So if I look at the stock year to date, overall, since it's listed in 2020, it's been a bit of a ride. It reached up to a high of about $387, and now it's currently about 120, 125, 120, 130 range. So the huge decline. So from the beginning, it's about 46% decline. Now year to date, the stock has declined about 60%, about 61%. That's a huge decline. Now let's look at the stock's performance in comparison to your NASDAQ 100 stocks, Invesco. So this is your Invesco. I think it's doing better than what Snowflake has done. The decline has been less. And let's add one more competition to it. Let's add S&P here and then see how it's compared to S&P. So S&P is obviously the decline is far sharper than S&P. So in terms of if you compare with the index, the decline has been significant, a 60% decline over this year. So stock has taken a lot of beating. You can interpret it two ways, that stock has fallen a lot. Maybe it's an attractive price to get in. I'll get into that as well. Now, what is company is good, results are good. Company is on a good track. They're talking about 2030 strategy, and they're saying that they want to get revenue of about 10 million by 2030. And they seem to be well on track. It's their statement. So from that point of view, company's fundamentals look okay. Now, valuation is one of the things. Now, this is your price to sales ratio, a way to assess these emerging or growth companies. And you see that Snowflake, this is price to sales ratio of Snowflake. It has been high as 114. And it's been declining continuously as the stock price is declining, is about 28. Recently. Now it's not so bad, but it's still high. If you look at other companies like Datadog, which has had very good results, about 26. If you look at Microsoft's about 10, Salesforce 6, but those companies are obviously not growing as fast as Snowflake is growing. So nonetheless, it was very, very high, and it's still a tad bit high. I would think like that. Now, what is the forecast? The analyst forecast on that. This is your tip ranks. There's about 27 analysts. They're talking about moderate buy. There's about 202, about 56% upside. So from that point of view, pretty good stock. And if I look at other, there's a service called Stock Analysis, and you can also look at it. It's free. It shows a buy, and it's about 37 analysts. I think more than 39 stock analysts, and it shows an average price of about. Shows an average price of about 321. So if you look at Current price is 129 and 321. It's a significant growth for you. So if you look at the street estimates of the pricing, it looks pretty, stock looks pretty attractive. If you look at the price and sales ratio, I think it's slightly at the higher side, but the company is also growing very fast. The guidance is not so great, but not bad either. So summarizing the company, what the company looks like to you and what the company looks like to me. Positives: company has strong moat. I mean, it's in the right side of the whole world is towards digitization. It's in the right side of change. Strong moat, strong growth, strong dollar retention rate, very loyal customers, very strong gross margins, and it's building operating leverage. That is, cash flows is becoming towards non-GAAP cash flow positives. Now, what are the watch out in the company? Growth will slow down. It's likely to slow down, and it's a growth company. Still a bit on the edge all the time. Macro headwinds. The company's spendings might decrease, and that reflects in a little bit of conservative guidance for the company. One of the things which I said is a bit US centered, and valuation to me compared to others, it looks a bit high. So what's next? In my view, and again, feel free to have your own view, and that's important. I would rate the recent quarterly earnings somewhere between 3.5 to 4, more on the side of 4. If you're running a diversified portfolio, if you believe in digitization, if you understand data, I think for a good diversified portfolio, it could be a good addition. Third thing, which is more important, is that I think the pricing is still high. The stock price is still very high. It has been readjusted a bit, but still high. So what you possibly can do, or what I'm doing, is dollar cost averaging, that buy a bit every month or every week and buy it over a long period of time. So the price averages out. That's it from me. Happy investing. Do your own research.